There are two types of outgoings in a commercial property. As a tenant, you pay for your own outgoings for the individual area, which is the individual utilities, maintenance costs with the area. So if you've got to replace any repair jobs on your plumbing, things that you use only yourself. Then there are building outgoings. For example, the items in the public areas like lifts, corridors, public toilets, etc. Now, what are included in the outgoings? So basically, outgoings for the whole building, you as a tenant on most leases have to pay the percentage of the outgoings as is compared to the area you lease. For example, if you lease 10% of the building, you pay 10% of the outgoings. Some of these outgoings could be as follows. Management fees. There may be a company employed, or they may appoint an individual manager to look after the property. You pay a percentage of that. Insurance. You've got your own contents insurance. In some leases, or most leases, especially in retail leases where you're on the ground floor, you may have to pay plate glass insurance as compulsory as part of the lease. And there's building insurance, which is the whole structure of it. You pay a percentage of that. Property taxes. That could be things like council rates, water rates. You pay for usage within your premises, but water rates, total bill for the building, sewerage costs, etc. for the public toilets, etc. Land tax. Now, land tax is a bit of a controversial issue with most commercial leases. Some landlords insist on it and some others. Depends on your negotiations when you lease the premises. Security. You may have security cameras, you may have security guard, back to basic security. You may have a security company that walks through the premises. It's important to know that the outgoings vary between the size of the place and depending where it is. But common thing is that if you lease 10% of the property, you have to pay 10% of the total outgoings. So these are some things you negotiate when you're negotiating your lease with your landlord. And the best way of looking at it is you've got your individual outgoings for individual area and you've got your outgoings for the total building. You shouldn't confuse it with capital expenses. For example, things like if the landlord had to replace the roof or had to replace the lift, something like that will be a capital expense, whereas to repair the lift, repair maintenance contract for the lift or maintenance contract for the conditioning, that is items which are usually paid within the financial year on a regular basis, are general maintenance items. Capital expenses are usually items which are outside the 12-month period, things that are depreciable under the taxation purpose. That's a general rule of thumb. That's the way I look at it, is that if the landlord can write it off at depreciation, it's capital expense. If it doesn't, as a running expense of the property, then it's a maintenance within a 12-month period, which you as a tenant will be liable to pay under most leases. This is Con Tastzidis from CST Properties. Please subscribe to the channel.